What's going on, guys? Welcome back to the channel. Today I'm going to do a video based on what Forex is and how you can make money in the Forex market. I'm going to give you a rundown of everything you need to know to understand the concept of Forex and how Forex traders do make money. We're going to run back to the apartment, set everything up, grab the whiteboard out, and I'm going to talk you through everything you need to know. What's going on, guys? Just got back to the flat and I'm going to run you through the basics of Forex. So the first thing you need to know is that Forex is short for foreign exchange. And what this means is exchanging one currency for another. If you've ever been on holiday and you've needed to exchange your money for dollars or euros, you would have gone to a currency counter, whether that be Sainsbury's, post office, and you would have participated in a Forex trade. Now, the way we can make money from this is by exchanging to one currency at one rate and then waiting for the exchange rate to move and moving back. I'll explain what that means as we go through. So the easiest way to explain this is the GBP USD, which is the Great British Pound for the US dollar. I'm going to show you an example with this and how we're going to make money with this. So we have the Great British Pound against the US dollar. Now, every currency pair has an exchange rate. You've probably seen it on the counter. There's a random number at the back, which means what you're going to get for your money. So for example, if you had £1 and you wanted to exchange it for dollars and the exchange rate was 1.2, you'd have £1 in pounds and you'd exchange that at the rate of 1.2 and you'd end up with $1.20. Now, the way we're able to make money from this is exchanging larger quantities of money other than a pound or two. So I'm going to show you an example. These aren't exact figures. I know the exchange rate isn't exact, but I'm doing this just to show you in much simpler terms. If I start going into like decimal points of currency exchange rates, it's just going to get confusing for now. So I'm going to keep things really basic. So say, for example, we had £100 and we wanted to exchange it $2 at the rate of 1.2. We'd end up with $120 at the rate of 1.2. Now say you've got your $120 from your original £100, you've gone to America, but you never actually spent any of your spending money, you've still got it in cash. So when you fly back to the UK and you go back to that currency exchange, Sainsbury's or post office, and the exchange rate has dropped, so say to say 1.1. That means you've got $120 at first, and you want to exchange it back at the rate of 1.1, that means you end up with £109 and 9 pence, resulting in a £9 and 9 pence profit. So as you can see, we were able to buy one currency at one price, wait for the exchange rate to change, and then change our money back, therefore resulting in a profit. Now, next up, I'm going to explain to you how we're able to predict price action in the market and how we're able to spot patterns and profit off this.
Now, in order to trade on the Forex market, we need to be looking at the charts which show us the historic data of the exchange rate between certain pairs. Now, as explained in the video earlier, we were doing it on the Great British Pound US dollar. So this chart here is the Great British Pound US dollar. Now, on our screen at the moment, this is actually going back to May last year, but the chart goes way further back, tens of years, pre-2000. Now, at the moment, this does look like chaos. It doesn't really make much sense, but this isn't all random. This is actually called the breathing cycle of the market. This happens in patterns. Until we actually plot support and resistance lines on and trend lines on, this is actually really hard to digest because we can't actually make sense of any of this until we actually start to break it down and see what's what. Now, I'm going to jump over to the whiteboard and I'm going to show you how we make sense of this.
In order to make money in the market, we don't need to have a clue where the currency exchange rate is going. All we need to do is be able to find certain patterns which weigh up the probability in our favour. Now, one of my favourite patterns to trade is the head and shoulders pattern, which looks like so. We have the left shoulder, the head, and the right shoulder. And we also have a neckline. If you're not familiar with support and resistance, don't worry, I'm going to do another lesson in depth. But for now, what support means is that price failed to break below. So price was supported by buy pressure. So lots of people buying that currency. Now, in order to make this trade, we would expect to see price, the exchange rate, break below this neckline come back up for a retest, and then make a continuation move to the downside. Now, is this pattern going to happen every single time? Absolutely not. This pattern may happen 7 out of 10 times, and the reason we still look for this pattern to make a trade is because in history, once we've seen this pattern over and over again, we've seen that this pattern stays true and holds to its structure, say 7 out of 10 times. So what that gives us is a 70% probability on that certain pattern. Now, another one of the patterns I like to trade is it's called a trend line. And what this means is price creates a trend, and the trend line defines that trend. Now, that trend line would then be another confluence. So say, for example, in history, when we see price reject twice of a certain trend line, we would be looking for price to come up for a third time and make a continuation push to the downside. Now we can tie that in with our head and shoulders pattern, because what we can do is we can draw a trend line on our head and shoulders pattern, which then adds us two confluences. So we've got two reasons to believe why this currency pair is going to go in a certain direction. And that is how we make money in the market. It's not by knowing, but by weighing up the probability. Now, probability is one thing, and the other thing we need to look for is a good risk reward. Now, when placing a trade, you would be looking to make a minimum of a 1-to-1 risk reward. What that means is you could lose £10, but you could gain £10. But think of it this way: if you've got a pattern which has, say for example, a 70% probability, because it's not a 50-50, the odds are then weighed in your favor. And what you're looking to do is stack up those odds, so when you do take the trade, you have as many reasons in your favor as possible. Now, this isn't going to happen time and time again. That doesn't mean every time you take a trade, you're going to make money. But what that means is over time, you can increase your edge and you can increase your probability of making money. Now, the other thing of patterns is risk reward. Now, when I place a trade, I look for a minimum of a 1 to 3 risk reward. What that means is if I was looking to trade on this pattern, I would be looking to enter around here. However, I would want to put a level in which the currency exchange rate did not respect this neckline and did not complete the pattern. It would cut my losses and take me out the trade before I lose much more. And on this particular trade, I would then go ahead and put my stop loss around about here. What this means is that if the currency exchange rate breaks above this neckline and continues upwards, it would cut my loss at a reasonable level. Now, we put this level at a place that if it hits is 100% not a valid setup, and we cut our losses at the best possible time. Now, the reverse side to that is our target profit. We would put that in a place in which we want the currency exchange rate to go, and once it gets that certain level, we would want it to automatically bank our profit and put it back into our balance and close us out of that trade. We don't want to stay in trades for ages trying to rinse everything out that one trade. We want to take the profit, bank it, and then move on to the next trade. Now, for this particular pattern, when you're trading head and shoulders pattern, your target area is usually the distance between the top of the head and the neckline, flip side down here. So what that means is I would be looking for this distance to be this distance, and this would be my target profit. Now, I'll show you a risk reward and how it would look. You would risk £10, but I personally look for risk rewards which are a minimum of 1 to 3. So what that means is my risk reward would look something like this. I would risk £10, but I could have the possibility of gaining £30. Now, the reason I do this is because it gives me a higher probability of making money. It enables me to actually lose up to 70% of my trades and still make money, and I'll show you how that works. Say I took 10 trades and only 3 of them won. I'll show you how that looks and how I was still able to make money. So I've got 10 trades, 3 of which made profit, which is 3 times £30, which means I make £90 profit. I would have 7 trades which would lose me £10, which means I would make a loss of £70. So we take our £90 profit, we minus our £70 in loss, and I was still able to make a total of £20 profit. Okay, so that concludes today's video of what Forex is and how you can make money. I wanted this video to be a very short rundown of what Forex is and how you can use it to actually make money online. I didn't want to go too in-depth with the details. I will be doing another video on more in-depth things to help people learn. If you are looking to learn and further your education on Forex, I do offer a completely comprehensive course on trading Forex. I'll put the link in the description. If you have any questions, drop them in the comments below. I'm also going to be doing a video soon on what the basics of Amazon is. If you're unaware of my income streams, I don't know if you follow on Instagram, but my income streams are social media marketing, Forex, and Amazon. So they're my main 3 streams of income, and this channel is basically going to be based on my 3 streams of income, and I just want to teach people what I've learned over the years so they can essentially skip out all the mistakes I made